It gives me great pleasure to welcome back Adil Al-Ghamdi, who is the CEO of Tadawul, known, I think, to many of you. And we're going to try something new, a new way of doing things this morning, which is to sort of have a conversation and a presentation at the same time. Adil has some slides, and I think they should be illustrative of what we're talking about. That's the plan, and we'll pick up on those in our discussion. But let's start to some extent where we actually left off at the tail end of our conversation last year, which is that it's looking at Tadawul and looking at the Saudi market from a regional perspective. I mean, the regional markets, Bob, thankfully in a way, didn't actually single out the GCC within the GCC equity markets, the GCC capital markets within his presentation, but they have performed. They are a standout group of markets within the world, whether we want to classify them as emerging markets or frontier markets or whatever, they've done incredibly well, and that includes Tadawul. So why do there's a why there, but how do you see Tadawul, within the region? We've seen Qatar, you've seen the UAE upgraded by MSCI, but I mean Saudi is much bigger than them, but of course is not upgraded due to the lack of access. So where are you within the region?
Okay, first of all, good morning.
You'll need to speak close to these things, I'm afraid.
Good morning, and thank you, Richard. Assalamu alaikum. Good morning, everyone. I'd like, Richard, if I may, before talking about our regional and global standing and perhaps how we stand with regards to MSCI, I'd like to talk a little bit about the identity of the Saudi Stock Exchange, because I think that's important to frame in the hearts and minds of our audience and any listeners out there in the future. The Saudi Stock Exchange was born out of the Capital Market Law, which was issued by royal decree back in 2003. The law placed the Saudi Stock Exchange in a very privileged position as the national securities exchange and sole securities depository allowed to operate within the kingdom. Between the years 2003 and 2007, we operated essentially under the auspices of the Capital Markets Authority. In fact, we were housed within the same premises. By March of 2007, we established the Saudi Stock Exchange as an autonomous, closed joint stock company completely owned by the Public Investment Fund, whom Richard, to be the investment arm of the Ministry of Finance. The purpose of the Public Investment Fund is to invest in commercial entities that are strategically important to the growth and development of the national economy. As such, the Saudi Stock Exchange in itself is not only a commercially oriented entity, but it is also a national interest entrusted with tremendous social and economic responsibilities. So everything that we do at the exchange must be within the confines or within the context of that identity. Going back to your question, and I thought that was very important to highlight, because there's always confusion, by the way, with regards to the CMA and the Saudi Stock Exchange being one and the same, and we are not. They are the regulator, we are the regulated. So going back to your question, and with regards to our standing, the Saudi Stock Exchange ranks as the 23rd largest stock exchange amongst 62 World Federation of Exchange members. We have a market capitalization of around $513 billion as at the end of the first quarter of 2014. We have 164 listed constituents across 15 sectors, which I believe we'll touch upon later, Richard. We have 30 member brokers linking us to around 4.3 million investors out there. We have excellent liquidity metrics. $389 billion worth of transactions were conducted over our platform over the last 12 months ending Q1 of 2014. We have a liquidity ratio of around 76%. So the metrics and the dynamics of our exchange are very, very positive. When you compare us to the GCC markets, We comprise around 50% of market capitalization within the GCC. We comprise around 71% of value traded over the last 12 months as well. So from a regional standpoint and also from a MENA standpoint, the Saudi Stock Exchange is the largest and most liquid platform in these two regions. Looking at us from an emerging markets perspective, and what we've done is looked at 24 jurisdictions out there who have been classified as emerging markets. We rank number 9 in terms of size in comparison to those emerging markets, and obviously we're dwarfed by China and India. We're very close to Malaysia and Russia, so maybe over the course of the next year and a half we'll overcome them or overtake them in terms of market size.
Sorry, I mean, let's just, sorry, I don't want to interrupt your stream of consciousness here, and I'm rather stupidly, I'm actually not wearing the right glasses, so I'm sort of slightly squinting to get this right. But looking at this list and picking up what Bob said about emerging markets, I mean, you know, China, India, these are enormous countries.
Yes.
Korea, extremely, you know, why Korea is still in the emerging markets universe, you know, yes, there are technical reasons, but it is, you know, it's an OECD member. It's a very high-tech, developed economy in many ways. I'm just trying to think of, you know, Taiwan again is been in the markets for a very long time. So, you know, really the ones you're comparing yourself there with are Brazil, commodity-based economy to some extent. South Africa, equally commodity-based economy, but with a long history. Russia, Malaysia, and then I mean, interestingly, you're bigger than Mexico, which is not something I would have thought.
We are, and as I said previously, we're very close to Malaysia and very close to Russia, and you know, potentially over the course of this year or maybe the next 18 months, we may overtake them in terms of size, particularly because of the momentum that we've been seeing in the market recently.
But you know, there's a big but here.
Yes.
You know, all of those markets are open.
Yes.
To foreign investors.
Absolutely.
And I know that you are through swaps, but but that is a relatively cumbersome and expensive way of accessing the market. And I'm not going to ask you the obvious question because I know that you know there isn't an answer to this. But what do you think would happen if you were open?
Well,
that's not the obvious.
No.
Well, would you immediately rocket to the same size as Brazil? Do you think?
Well, I don't know whether I can answer that question. In terms of will we be the size of Brazil, but if you look at our positioning as we speak today, our market capitalization amongst those 24 other constituents, and we've included Qatar and the UAE, we represent, I believe, something like 3.6% of market capitalization there. So if we were to be classified potentially, let's say in the MSCI Emerging Markets Index, we would represent roughly 3.6% of that index. So that would allude to, if you assume that $1 trillion follows the MSCI index, and I'm sure it's much bigger than that. I don't have the information with me, but that would suggest that around $36 billion worth of investments would be flowing into Saudi Arabia.
Okay, well, let's not get bogged down on this whole MSCI emerging markets, because I think I think it's an incorrect metric and indices myself.
Okay.
I think it's not a very, and as Bob said, I think it's not a particularly useful way of looking at the world. But I do agree that it doesn't matter whether I think it's useful or not. It's a benchmark that people use, so
that's right.
So that's important.
That's right.
Sorry, I interrupted.
No, that's fine. This is all part of the discussion. I think it's very important.
Please carry on, and let's have a look what we.
The next one is how we place in terms of liquidity. Again, in comparison to these 24 emerging markets, and we rank again very well. We're the 6th largest or the 6th most liquid platform in comparison to these emerging markets. So just to summarize, from a GCC standpoint and from a MENA standpoint, we're ranked number 1 in terms of size and liquidity. From a global standpoint, we rank very well, and from an emerging market standpoint, I think we also rank very well.
Okay, so let's again. I like this. I've never done this before,
sure,
and I think this is brilliant. I think we're going to do it again because anyway, I find I haven't seen these slides, by the way, so I'm just sort of making it up as I go along. Okay, let's look at this number. Just explain to me what velocity. I mean, I know, liquidity is a word. Everyone loves the word liquidity.
Important.
But let's actually define what it means. So, what does velocity mean in this case?
Well, velocity is a measure of liquidity that's commonly used by exchanges, and what it simply means is the amount of market trading versus the market capitalization. So it tells you how many times the market has been turned around over the course of the year, and that shows ultimately liquidity. So the more times the market has been turned around, the more liquid that market is.
Okay. So
and I think we benefit from a 76% liquidity ratio, or velocity ratio.
Okay. So we established that metric as being good. Now let's look at these listed company numbers, because I think in those figures there's quite a lot of things that we should talk about. The standout there, of course, is that China has got loads and loads of companies. Okay, I always sort of forget China. China is things. Turkey, highly liquid. Not a lot of companies listed.
Sure.
Highly liquid. I mean, relative to the rest of the universe. Again, not a lot of companies listed.
Sure.
Now, that then comes down to a question about the market. 164. It's not a small number. It is relatively small comparative to it. But what this is saying is that the trading is concentrated in a relatively small number of mega stocks.
Absolutely.
Now, we all know what those mega stocks are. Well, I mean, I'm going to guess. They are people like SABIC and the related entities, other companies, a lot of them that begin with the letter S in English, that are at least partially owned by the government.
Yes.
Now, is that is that a fair thing to say, number one? And number two, is that a good thing? Is that not just saying really what we're doing is we're trading on the back of a government guarantee, the market is driven by retail, it's slightly speculative, that this is not an institutional market in the way that, say, Korea, Turkey to some extent, although Turkey is less institutional than it likes to think, but certainly China is the big difference there would be that that's a market that's driven by institutions. So I've forgotten the first question, but let's talk about the institution and the investor base.
Sure. Let's talk about the issuers.
Issuers, okay, let's talk about that.
You alluded to that. I mean, yes, 164 issuers is not a lot of issuers for the size of our economy, I don't think. Actually, just for the sake of the audience, the red dots indicate the number of listed companies in each of these jurisdictions. You'll see that India is missing. India has around 7,000 listed companies and more. Actually, if we had plotted it on the chart, the chart would look slightly disfigured. So we left it at that. Yes, 164 listed companies is not sufficient. We're trying to reach out, and maybe the next slide will illustrate this. We're trying to. We estimate that there are around 800 joint stock companies, closed joint stock companies in Saudi Arabia. We try to reach out to them in various ways to try to bring them to market. In fact, over the last 4 years, we've had 3 IPO events over the 3 key provinces, attracting the attention of around 220 family-owned businesses. We've met on a one-to-one basis with 161 of these businesses. We're happy to say that around 35% of these businesses are now either actively working with a financial advisor in the IPO journey, or are seeking further counsel from these financial advisors as to how to take it forward.
Okay.
Please.
How many more slides have you got?
Just a few more slides, but I think we can...
But I don't want to sort of stay on one if you've got 3 or 4 more.
No, we have 3 or 4 more.
Okay, 3 or 4 more. Let's just do this.
And one of them actually does talk about sector diversification, if that's what you're looking for.
Okay. Well, again, what I pick up from this is obviously that you're being very active and that this is good, and congratulations and lots of encouragement to do that. You're going to family businesses.
Yes.
We're not talking about privatization of state or quasi-state institutions.
That's correct.
I mean, that's
correct.
a different question, but people asked that yesterday. There's some people put forward there's a privatization.
Yes.
But your emphasis currently, as the exchange, that's not to say that the government doesn't have other things that it might do with privatizations, is to go for IPOs for existing family businesses.
Yeah.
And some of these are very large businesses, and it wouldn't necessarily be the whole thing, it would be a part of it. What do you believe is the key driver for them choosing to IPO? Is it purely the valuation? Because that's what they would say. I've talked to them in the past 2 years. Look, you know, we might do it, but hey, look at the market. The market is, you know, the valuations are pretty horrible. We don't need the money. Let's not bother.
Valuation is a key driver for any decision-making process when it comes to IPOs, absolutely. And again, it's probably on the top of the list. However, I think there are other things that should be considered by businesses when they start, you know, considering whether they want to go IPO or not. You know, IPO provides sustainability in business, introduces strong corporate governance, ensures that there's a clear line of inheritance when it comes to family-owned businesses, because you have a lot of debates sometimes when the principal owner of a company passes away, and then you have debates and arguments as to who owns what and so forth. So
it gives them an acquisition currency.
It gives them an acquisition currency, and again, you know, transparency is extremely important in the Saudi economy. And I think bringing more closed joint stock companies on board will allow for further transparency, but encouraging them is bringing awareness to them, I believe, ultimately, educating them as to the pros of becoming a listed company. But ultimately, you know, sometimes they see what the volatility in the market, the way that the market behaves. I think sometimes that you know, provides them with not less incentive, but less drive to come to the market. But absolutely, I mean, valuation is key. Control is another aspect. You know, people don't want to lose control of their organization, but you know, ultimately, I think we have a free float in the market of around 45%. Ultimately, control is still maintained by family-owned businesses.
Sure.
I think becoming public provides them with the inputs and the advice that they need to grow as a business, both locally and internationally.
Well, you know, I mean, I know that Euromoney is not listed on the Tadawul, but Euromoney is listed on the London Stock Exchange, and yet we are still a family business. Our original shareholder or shareholder family is still the majority shareholder.
Yes.
So, you know, even in, you know, in the UK, a global business like us, that model is still followed. It's not unusual to put that. Let's go. We haven't got long, unfortunately, so let's go on to the next slide and see what we can.
I think one important aspect which you touched upon was about sectors and the diversity of sectors. Obviously, we have 15 sectors within the Saudi stock market. You know, the financial, telecommunication, and by far petrochemical sectors are the most dominant constituents of our market, comprising around 63%. Petrochemicals in particular is around 30%, and you would expect that to be a natural consequence.
Yeah, that's not a surprise.
Yeah, it is not a surprise, particularly due to the very, how can I say, aggressive investment in manufacturing that has happened over the last 10 to 15 years, as well as the comparative advantage of the kingdom when it comes to downstream products. So that's not a surprise. Do we need further diversity in our market? Absolutely we do. And I'm looking to see more healthcare companies coming to market, and I believe that there are a few in the pipeline with financial advisors as we speak. I'd like to see IT companies come to the market as well. But ultimately, the expansion and the diversity of our stock market, I believe, will come from knowledge-based industries where there's a heavier reliance on intellectual capabilities and rather than on physical inputs or natural resources.
Sure.
And as a result, that's why I believe that development of and investment in SMEs and the new age of Saudi entrepreneurs is fundamental in fermenting the required growth in that important and strategic economic segment of our economy.
If I was to get a chart like this,
yes,
of say the Emirates,
yes,
and I mean by the Emirates, I mean the Emirates. I don't mean Dubai. I don't mean DFM, or I mean both DFM and ADX. Do you? I mean, have you? I mean, you could just say you don't know. It doesn't matter. But would it look fundamentally different to this? Do you think? Would there be more construction, maybe?
I think
real estate.
I think you'd see telecom and banks and financials having roughly the same mix. Petrochemicals in the UAE, I don't think so. Perhaps if you compare this chart with Qatar,
Yeah.
you'd have a very similar chart.
You'd sort of, if this was a UAE chart, you'd sort of swap the real estate with the petrochemicals.
Absolutely. The petrochemicals with the real estate.
Yeah, I mean,
yes.
you would have.
Yes.
I'm sorry, I can't see if that's 20 or 30%. 30%.
For petrochemicals,
Yeah,
30.
30%.
Yeah.
I think probably more for Dubai would
Sure.
be real estate. But anyway, never mind. That's
Sure.
just a sort of a. Let's crack on because there's a big thing saying time's up.
Sorry, I think you want to ask about new products and services within the
Yeah.
Saudis.
So I mean, I have two. Just go on. Tell me about new products and services. I think I do want to ask about that. I was going to ask about that.
I think everybody wants to know more about
Yes, everybody wants to know. So why don't you tell us?
what it is that we're doing.
But we've got 5 minutes, really. Otherwise,
I'll try to cover it in 5 minutes
If we can.
or less. The Saudi Stock Exchange is undergoing tremendous transition as we speak. We have just signed with Nasdaq OMX to upgrade our trading platform to the latest in trading technologies, Nasdaq, the Extreme INET trading platform. That should bring enhanced experience to our members and our investors, but also what it does is positions us very well for our plans, our capital market development plans for the future. The other thing that's very important, and I believe everybody should be focused on this because this will change the complexion of the Saudi Stock Exchange, in that we are trying to activate, working very closely with the Capital Markets Authority to activate our full set of responsibilities as prescribed on us by virtue of the capital market law. Activating those responsibilities will bring tremendous opportunities for us to expand our existing range of products and services and also introduce new ones. Ultimately we'll be looking to introduce or establish end-to-end solutions for our issuers, our investors and our members. Turnkey solutions, if you want to call them that, or plug-and-play solutions, if you want to call them that. But we want to also look at foreign equity cross listings within Saudi Arabia, and hopefully next year, by the beginning of 2015, we'll start reaching out to GCC investors who are very interested to list on our platform. We're essentially the venue of choice in the Middle East. We need to be more proactive on that, and obviously fleshing out the listing requirements for foreign equity is going to be very important, and actually that's part of this activation of our duties. We want to introduce other products in the form of warrants and potentially going forward advanced securities. We want to, essentially what we want to be is a multi-product, multi-market, multi-client platform that provides integrated solutions end-to-end to our stakeholders. So that's where we are, and actually there's a small chart which I don't want to
I can see consultants.
Well, actually, no.
Did you do this? Sorry.
Actually, this is not consultants. I try personally to shy away from consultants at all times. I love them, but
yeah, we love them dearly.
But I think we can do better. That's my ultimate view.
Sorry, I'm interrupting you. Just very quickly,
Sure.
Adil, talk us through this sort of thing.
So basically, this is roughly where we are right now. I don't want to read any of the text on the screen, but over the next 5 years,
because I can't see it. So
over the next 5 years, we want to expand our products, our markets, our services, and our customers, and ultimately these are our value drivers. We have a business plan which we are just about to get ratified by our board of directors at the end of this month, and once we do that, both myself, the board, and my management team, who are staring at me right now, will have a very clean,
with smiles on their faces,
very clear direction for the future, which is what we need. Again, we're going through tremendous transformation.
Okay, well, I'm going to ask you one final question.
Please.
Now, we've heard you, being very excited about IPOs. When are we going to see you, Tadawul, IPOing? Or are we going to see you?
Okay. Well, that's a good question. Thank you for that. I think there's been a lot of debate and a lot of talk over the last few years about IPO, about Tadawul going public and so forth, and when is Tadawul going public? The answer to that is we are going public. That is an aspiration. We will be preparing for it extremely soon. We will be looking for to hire a financial advisor sometime in the very near future. Please don't call us, we'll call you.
I'm sure they're going to listen to that.
But what we need to do, Richard, I believe before doing that is to ensure, sorry, time's up,
Okay.
is to ensure that we have all the pieces in the right place that positions us for the growth that we're looking for in the future.
No, that makes perfect sense. And you know, on our behalf, I hope we can you know, continue to work with you on that journey and tell that story, because it's a terrific organisation, and you know, under you know, dynamic leadership, great things should happen. So,
thank you.
Adil, thank you very much for joining us. I'm sorry we didn't have so much time. For the first time we've ever done this presentation and conversation, I think it works really well. So thank you for that as well.
Thank you so much, Richard.